Welcome back to another episode of California Mortgage Bankers Association Diversity, Equity, and Inclusion podcast. I'm your host, Shashank Shekhar. I'm the founder and CEO of Insta Mortgage, and this show is brought to you by Prime Lending. Now, today I'm super excited about the guest that we have for this specific episode. Mosi Gatling. She is the sales manager at loanDepot in Nevada, Las Vegas, actually. Mosi and I met recently, and I was super impressed with not just a lot of things that she is doing, but her take on minority home ownership. And I thought she would be a great fit to be on this show. So welcome to the show.
Thank you so much. I appreciate you having me. I was equally impressed when I had the opportunity to meet you a couple of weeks ago at the conference here too.
Thank you so much. Thank you so much. Let's talk about some of the things. One of the things that comes across very clearly with you, Mosi, is the fact that you are extremely passionate about serving underserved. A lot of people in the mortgage industry get in because they think it's an industry where you can make quick and easy money, which we all know that's not the case this year. But a lot of us are actually very passionate about it, and that's why I agreed to become the host for this specific podcast, is because I am very passionate about driving diversity and inclusion in the industry, and you share that passion. Talk to us about it, about your personal journey of being in the industry, what really drives you, and just talk to us about some of the personal notes on your journey so far in the mortgage industry, and why are you so passionate about serving the community that you do?
Okay. I've been in the mortgage business quite a while, many years actually. So I really got into it because I found it fascinating that you could help people as far as the journey of ownership. It's so important for families to have stability in general. And when I first got into it, and I got into it by way of, believe it or not, I started in banking, and then I worked for a credit card company. And then I worked for that credit card company. That bank also owned a mortgage company. So I kind of, I did all facets of that personal finance thing that we all know about, and got into mortgages because I was like, oh, wow, you can leveraging equity and money and how to save and just better allocate your earnings and your expenses. I just loved it. And a lot of people maybe didn't think of things the way I did. Mm-hmm. So when you showed them possibly how they could, well, first of all, purchase instead of renting, sure, not having to move as much stability for their children to be in school. And then also if they have a home, leveraging equity, literally to have cash to decrease bills if it was a refinance, and really putting together a great package for somebody to be able to do that. They haven't really been taught that per se. And a lot of them, again, didn't think like I did when it came to that. To improve their life using their equity and their home ownership. I loved it. It was a challenge for me to try to solve those problems for people. So that's kind of how I got into the business and really doing mortgages, and the reason why I like to. And I agree with you. I even think that even without this year, those who get into mortgage or real estate simply because they think it's such a flexible job, I'm like, where have you worked? Because I never worked there. It's not flexible. I go to work every day.
No, that totally makes sense. Now let's talk about some of the barriers, right? You and I have talked about this before, and I guess it's a very well-known fact that the Black home ownership continues to lag, not just behind, but significantly behind, especially white home ownership, and even actually compared to some of the other people of color, right? We still have about 30% gap. And that was almost the same number, if actually the number was slightly better when the fair housing became a law. So I think law is probably not a problem, right? I mean, there are things which are illegal. Bias is illegal, discrimination is illegal, redlining is illegal, but all of those are probably playing some role or the other, right? But what are you seeing on a day-to-day basis? You're a sales manager, you're a loan officer, you're actually doing this on a daily basis, right? What are you seeing as some of the hurdles when it comes to some of these people of color to become homeowners?
Mm-hmm. perhaps they have a path.
Okay.
However, when they come to get qualified, maybe that path just isn't realized in that very moment, which sometimes provides frustration to the person. Maybe the want to not be dedicated or have the time or the resources to dedicate to be mortgage ready in that moment, because their most immediate need is housing.
Okay.
They're not prepping a year or two in advance, for that particular moment, knowing that, everybody has leases that come up, but in that moment, they need a place to live. And they come maybe 60, 90 days prior. And because of the way they earn money, a lot of times they're not ready in that moment just because they didn't have those keys, those major steps they could have taken or can still take to become mortgage ready. Very, very things that you and I would say are pretty simple. The way they earn money, maybe not changing jobs. Maybe they just had a job change. Maybe they went from hourly to straight commission, just trying to get a hold of people a little bit earlier in the process. And I know we talk about homeowners education, but it's like you said, the guidelines are there. I don't know that they're going to change in the short term. like in the next 6 months, guidelines aren't going to change. So we have to, getting a hold of people earlier, not just education on owning a home in general, but like education around the guidelines. If you earn money this way, this is what you need to do. Don't change jobs. Don't switch careers. Don't change from commission or tips plus base to not, and not talking in a guideline manner, because rattling off guidelines will also frustrate people that aren't in the business. What we do is truly boring to most people, definitely boring to most homeowners. It's like stereo instructions, right? Like it would be reading stereo instructions. So to just help them maybe get ready or be in that position, so when the lease is coming due, again, to be signed, that they can move out of that into the ownership without that delay that causes frustration that often sidelines people from buying a home.
Yeah, that's just such a brilliant thought. The fact that it's never too early to start getting ready to buy your home, and that's where you put it so very well. Is that a lot of times you get people when they're already actively looking for a home, and they say, "Oh, I want to buy in the next 4 weeks." As you rightly mentioned, sometimes it could be your lease coming to an end, or you're expecting a baby, or you're getting married. Something there's a pending deadline, and you want to get over that deadline and want to buy a home, but then you realize that you should have probably started preparing, say, 6 months in advance or 12 months in advance. And that's something which, as a community, as a lending community, we need to talk more and more about the fact that, look, you don't have to come to us for pre-approval when you are 3 seconds away from getting your offer accepted. That's not how it works most of the time, especially when you're a first-time home buyer and you don't know much about what the home buying process is, because we can't change guidelines, right? This is a highly regulated industry. Most of the loans that we do, almost 95% of loans get sold to one agency or the other. So at the end of the day, we are, even if we believe that you can sustain that home ownership, we are not the ones signing off on guidelines. We can, as Mosi and Shashank can decide, oh, this looks like a nice borrower, and I'm sure she is going to make her payments, and let's give her a mortgage.
Just give it.
And then that's something that, as an industry, it's a really great point.
I love that you say that, though, because when we use these, I don't know, I guess I don't want to say high level terms, but I definitely want to say, even explaining the processes of, say, what underwriting is, talking to your buyer and saying, oh, I'm going to send your loan to the underwriter. They don't get that.
Exactly.
I just say, I'm going to tell you it's underwriting, but basically that's the person that's going to sign the checks here.
Exactly.
Jose says that you should get a check. I've even drawn it up for you. There's no signature on it. The underwriter is going to sign that check. And they got to make sure that you've met these guidelines. So just trying to talk to people kind of in that manner, because when they think underwrite, they think of this very overwhelming thing. And also, culturally speaking, it brings out some PTSD. The possibility of being denied is sometimes just overwhelming for people. And that's that cultural perspective. I had talked to somebody, he told me when he was, and he's probably 46 years old, he's in the business too. He said, I will never forget the time that I walked into Best Buy. They encouraged me, oh, apply, apply, apply. You can finance this. You could get 6 months, no interest. It'll be this, it'll be great. This is how you can do it. And I applied and I was told right then, oh, sorry, we weren't able to do it. We're going to send you a letter. He's like, at 46, I will never, ever forget that feeling.
Wow.
And it, culturally speaking, it's very true. So the prospect that you ask for those additional papers, or maybe it's not as easy as they thought it would be, is discouraging.
Yeah.
So like you said, a little bit earlier would be great, because I think they just have a greater chance of those approval odds. And again, we do have to have their situation conform to what those predetermined guidelines already are.
No, yeah, makes sense. And discouraging it can be, and not just for a short term. Sometimes, as you said, even at 46, he kind of remembers that experience. And it was Best Buy. It wasn't even he was trying to buy his dream home or something,
He's
right?
never applied for another Best Buy card.
Yeah, there you
Because
go.
I wanted to know, have you ever applied again? He's like, no way. He's like, it was literally crushing to be told no. So some people don't go forward. Think about that. If you're in this time where we're like, where are the buyers all at? Well, they're afraid of rejection, you know, because they're there. They have never even owned before.
No, totally makes sense. And so we are, and that's why as loan officers and mortgage lenders, our job, it's so much more than just financial advice. There is a lot of emotional component to our roles as well. Because I mean, we also not just for home buying, there's tons of data both from Freddie Mac and Black Knight that shows to the fact that there are millions of homeowners who could potentially refinance for benefit, and they don't. And one of the big reasons is the fact, again, PTSD, as you mentioned, as strong as it may sound, it's like they have gone through an experience once. It was so horrible. They know that they can save money while refinancing. They just mentally can't get themselves ready to go through that experience all over again. It is like PTSD, so to say.
Right. Absolutely. Absolutely.
Okay. Let's talk about what you are doing, Mosi. Some of the data that you mentioned to me while we were talking earlier is it's just mind blowing, in the sense that one thing that I hear from a lot of people within the industry is that, look, we are doing all of this. You talk about diversity, inclusion, and minority home ownership and everything else. And because as you know, I'm extremely vocal about it. And we talk about the fact that, okay, we can slightly lean into the guidelines, maybe help with the down payment. We overcome some of those barriers and get them into the home. What happens after that? How do they sustain home ownership? And that's something that I want you to talk about. First, share the data on some of the loans that you have done yourself.
Right.
Then maybe talk about how did you achieve some of those numbers that shows in that data.
Yes. I think it's huge, and I don't know, I don't want to take a ton of like credit, like I had this master plan and
no, yeah. And in fact, that's what I want people to hear, is that you don't need a master plan to
you don't really have
it.
to have
Yes.
one. I hear so much about, say, gentrification and that term being thrown around. But if a culture or a unique set of people, or African Americans, will speak towards that specifically, we're going to be able to buy back the block, so to speak, as you hear, reside in the neighborhoods you grown up in, have those Black-owned stores and homes and things like that. Well, when you get them, you have to know how to keep them.
Yeah.
Number one, before you could go buy anything else, how can we sustain who is there? The habits, the things that need to be had. So I took a lot of time, especially the last couple of years. There were so many people that couldn't buy homes.
Mm-hmm.
So it gave me the chance to kind of talk to them a little bit, because they're in the hunt. They did come at the last minute, but I guess great news is they couldn't get anything at the last minute. They weren't in such a push and rush to push to approve me, push to find me something, push to close. It gave them the time to have the preparation. Like we try to encourage people to come a year before. Mm-hmm. Just like, let's have that initial consult. Let's talk about what this looks like. So you just signed your lease. In 12 months when it's up, you can be mortgage ready. Sure. These are some of the habits you need to do. So it gave us the chance to kind of talk to buyers. about that. And my philosophies were that if you currently pay $1,500 in rent and you want to go pay a $2,000 mortgage payment,
Sure.
and you feel you can pay it, that tells me you should be saving $500 a month that you would never touch because you want a $2,000 mortgage payment. And we're supposed to tell the underwriter, Fannie Mae, Freddie Mac, all the powers that be, DU is supposed to make sure that this is believable. Okay. We don't do stated income loans. You can't just state you can pay it. Okay. That's my philosophy. That went away 2010. So now that we're not just stating, we get to show and prove. So I need you to save $500 a month while you're looking for a home or while you're waiting for this bonus you're going to get to be able to have the down payment to purchase. It's good to have down payment assistance, but I also have to make sure on paper, it looks like you can obtain and sustain. Mortgage shock started becoming whispers of that with people asking for forbearances. Yeah. Can you sustain a payment shock of going from that 1,500 to that 2,000? Credit risk. Okay, I'm talking, of course, DU and LP terms. Does the system think this is doable because of factors on your credit, debt ratio, reserves, things like that? So save the $500 additional per month while you shop. That was a big thing. And sometimes it was $1,000 a month, or sometimes it was the whole mortgage payment simply because they were living with family.
Yep.
Oh, you can do it? That doesn't make sense if you don't have the adequate money in savings to show that when you get paid net, you can go pay this. Go save what your entire mortgage will be. Let me tell you what it is. You got to save that every month. It's got to look like you can do it. We have to prove it. And they had no problem actually doing it, believe it or not. Any other action items we would give at the same time, especially if they flinched at the mortgage payment we gave them. Wow, can you get it lower? People hear buying signs. I hear signs that maybe this doesn't work with the additional debts that you have. What's most important in life? This ownership, or can we talk about some of the things that on your credit that maybe you can work toward? I had people take advantage of the situation with the shortage in vehicles when you go to a dealership and go sell their car to the dealership, which is crazy. People had extra cars, or they bought a brand new car and they had an older one still. Again, what's most important in this situation? And we knew that they could go get what they paid for that car or owed on that car and then some during the last 2 years. So we really took advantage of having some of those honest conversations about the sustainability and family, and making sure that they were set up. And even if they could get down payment assistance, what was super cool is the fact that they saved money because we were trying to prepare them. They were adapted to the new mortgage payment prior to just getting it, and cold turkey, just having a flip from paying nothing to paying a mortgage to getting the assistance, but even having money left over. So whether they already had the money for down payment, now they definitely had money for utility deposits, cost to move. They don't have sheets on their windows if it was a brand new home. All these positive things that came about from that. And it just made them be able to really afford all the things that came with it. They weren't even, if you throw this at a new homeowner, they're not even really ready for it. Yeah. Like the things that come with ownership in addition to just the payment. And we're only talking about one part of their life. So prepping them that way really helped with everything else.
I used obtain and sustain. That's the key part to it, is that as an industry, sometimes we think that our responsibility, especially as loan officers, we think our responsibility ends with obtain. So let's do everything we can. Let's get them gift funds from their uncles and aunts and anywhere they can. Yeah, you do find a non-occupying do whatever you can to the obtain part. But then we don't think about the sustain part, right? Now they have all these gifts that they have gotten. They have somebody else on the loan, which they need to get rid of them at some point down the road. So they're under more emotional and mental pressure than enjoying the home ownership. And in their head, they're like, I wish I was just renting. And that's not a feeling we want to give them, is because then that's what does the PTSD thing that you were talking about earlier. And that we don't want them then to go and and talk to their cousins and nephews and nieces and say, this is really a bad decision to be
Right.
thinking about buying homes, is because, look, this is where it landed me. And so we need to go beyond obtain and really get them prepared for sustain, because this is just getting their budget ready as if you are a homeowner already, even when they're renting, is something they need to get used to. Because I mean, it is a real thing for any first-time home buyer. The payment shock that comes with buying a home is almost always there, because I mean, you don't always find the same home and even at same mortgage payment. And even if you do, some people don't even think that your property taxes, homeowners insurance, and HO and utility and trash and everything else that you pay on top of that. So that's brilliant that you work on it. And also, as an industry, I think it's a lesson for all of us, is that if we want to help drive minority home ownership, we need to work harder at it. If we continue to work the way we have over the last several decades, then those home ownership percentage will just stay at where they have been. They're not going to change by itself. We are the ones who need to drive it and help them get there. Let's
you don't do less business though. That's what, again, as an industry, I didn't do less business because I took that extra 20 minutes. So let me just give it a number. An additional 20 minutes of my life investing or pouring into somebody, I actually got more business. Because like you said, if they have a horrible experience, they're going to go tell tons of people. They had that great experience and someone says, yeah, I have to renew my lease. They're going to say, oh my gosh, I went to this awesome person. So my business actually increased with that extra 20 minutes. So it's definitely worth it on both sides of the coin. It's not a waste of time. And even those who didn't qualify or weren't mortgage ready right then, because they had other guideline things to tidy up as far as showing earnings or need to be on the job a certain amount of time or earn that commission, they still refer people because I took the time to tell them.
No, absolutely. The thing about that, the focusing on minority homeownership or underserved or low to income borrowers is not only an altruistic or charity or nonprofit work. Understand that you build your business. In fact, I mean, we have talked about this several times, but really the future of homeownership is minority. And that's something that if you're not focusing on, then you will have some serious problems down the road. Now, you talked about getting more business, Mosi, out of these people. Talk to us about the data with how many FHA loans did you did over the last couple of years, and how are they performing now?
My HUD community scores. I was very, very lucky that they were shared with me, because that was like my moment. Like I exhaled, like, wow, like it is worth it, right? You think you want to do good, give more than you take is my philosophy. I want to give more than I take. And out of the last 24 months, I think we closed 394 buyers that were deemed underserved. Amazing. Mostly in that low to moderate income sector. We did those loans with the philosophies that I told you about. And only 8 of those buyers were considered delinquent in that delinquent status. So to have 97% of that 394 closed customers be on time, sustaining successfully, is insane. Because I think, man, I couldn't even tell you, that's probably 50% of the business, I want to say, fit that category if I look at that same 24 months. So they're actually remaining in their homes, which kind of makes you feel good that what you're doing, that extra 20 minutes per person, is really helping them.
It is. And especially if you think about the data, what makes it even more astounding is the fact that it happened during the 2 years when the low to income borrowers actually struggled because they worked in maybe the hospitality industries. And you worked the Vegas market, where a lot of casinos were closed. In fact, all of them were closed for an extended period of time. So you're talking about not just a borrower category, which, if this number was in any market, it would still be astounding. But the fact that it was during a time when they struggled financially for a long period of time,
Right.
because of COVID, because in being in a market like Vegas, where a lot of that community is dependent on the casino being open, because that's where a lot of these people work. So that's brilliant work, Mose. Really,
Thank
extremely
you.
impressive. And a lesson for all of us is the fact that if you spend that 20 minutes, as you were saying, if you spend just that extra few minutes, you don't just get a lot of business for yourself, but you're helping build generational wealth for people who might not have been able to do that if they went to somebody else who discouraged them to do it. So
Absolutely.
thank you for being on the show. This
Thank
was
you.
highly useful for me. I mean, I've learned something new from you every time I talk to you, but hopefully for the audience as well.
I know. Thank you. And I appreciate the invite and being able to share. Super proud of it. And I think it can help everybody make our neighborhood strong, our family's neighborhood strong, and keep doing what we love to do as well and earn that living.
Yes. So, ladies and gentlemen, that was Mosi Gatling. She's a sales manager with loanDepot in Las Vegas, Nevada. I am your host, Shashank Shekhar, founder and CEO at Instra Mortgage. This was California MBA's Diversity, Equity, and Inclusion podcast. And this is brought to you by Prime Lending. I will see you on another episode of this podcast. Until then, stay well.